whether there is a announcement of the thing. Welcome everybody to this event of the Finance and Society Research Cluster. We are extremely fortunate that we could free ride on the Florence School of Banking and Finance that had brought Nicolas Véron to a conference here, a very high-level conference on the occasion of 10 years banking union. Nicolas is, I know him since quite a while. Whenever Charles Goodhart wanted somebody who's extremely well informed but can also talk a bit, think a bit out of the box, he invited Nicolas. That is what I first noticed. And with Charles Goodhart does this, then you know that's a trustworthy person. Nicolas has been an advisor to many people, has gone into Euro area reforms, what the Euro area should have as reforms to create safe assets and things like that. So a wide range of things, but in principle, you are a finance specialist, financial development, the excellent paper once on the banking union, all the details, but then he can also think beyond that. And that's why Harry, who I should acknowledge has done all the legwork for this meeting and communicated and thought with me about it and basically just always asked, should we do this? And then he went back and made it happen. We thought we'd take Nicolas for a question that sounds extremely fashionable, and it is geopolitics. But because he's somebody who knows so much about European finance, it's not just fluff. It is something where one can think systematically through what these risks are that could hit European banks and perhaps stock markets. So without further ado, I'm extremely grateful that you came, Nicolas, and he will talk for about 20 minutes, 25, and then we open to Q&A, to which I hope you in the Zoom will also contribute. Thanks a lot.
Thank you, Waltraud, and it's a privilege to do this. So we're all grateful to the School of Banking and Finance for the invitation and the opportunity. And thank you, Thorsten, for that. As you suggested, it's a bit of an emerging issue. I mean, in a way, it should have been there for a long time, but I think it's really only this year that I see people starting to think systematically about it. I mean, maybe not in academia, but certainly in my world, which is more the public policy world. So, for example, you look at Claudia Buch, the new head of the European Banking Supervision at the ECB, and she's very big on this. This has been kind of her signature issue since she took the job in January. You think also of in a number of different initiatives, both in the policy community and outside of the policy community, and kind of the people who watch it. Something is happening right now, so this is very timely for the discussion. So let me say very general things, because my own thinking is not really formed on this. So this is brainstorm mode. I want to brainstorm with all of you today, and therefore I beg for forbearance or tolerance that my presentation is not highly structured. It's just a couple of things I want to throw into the discussion. And I certainly don't claim to be a geopolitical expert, even so looking at the financial sector holistically, as you said I was doing, about how I have to think about risk in a holistic way, and that means thinking about the politics and the geopolitics, even so I don't claim any particular expertise in those areas. So I think what we can agree on is that the geopolitical context for the EU has become more challenging. And that has happened essentially in the last, 5, 6, 7 years. There are a number of elements here. The most obvious one is the war in Ukraine. I don't have to expand on that. But it's, a war on our borders. There are a number of big question marks. To me, the biggest one actually geopolitically is the US election. Not for the first time, but every 4 years now we're in this cycle to worry about the US election in 2016, in 2020, and again, and it doesn't always go the right way. The second one is by decreasing order of importance is probably East Asia. It's far away from Europe, but it's so consequential. So here I bundle essentially, China's direction in general, including their support to Russia in the aggression against Ukraine, the Taiwan issue, the Korean issue. And I think if you take those three together, you already have a lot. And the third one, in my view, less salient, but still important enough to be mentioned, is Middle East and Africa, which, of course, right now is focused on the horrible events with, October 7 and Gaza, but is actually broader because there are instabilities that can reach Europe, as we saw in the refugee crisis of 2015, in a very direct way. And I think that now includes certainly the Sahel and, a swath of Africa where a number of things have changed quite radically in recent months, right? With a different coup and swings of allegiances, which, by the way, can have monetary and financial consequences. If you think only of the West African monetary unions, there are 8 countries. Of these, 3 have changed government recently in a disruptive way. So you can think of things that translate into a financial, and it's guaranteed by the French government. So you can think of some scenarios here, even so I wouldn't say it's a major risk for France on the financial side, but still. Anyway. This is in contrast to the previous period, and we can discuss whether the uniquely calm period was the last 15 years or the last 30 years. It depends a bit on your opinion on 9/11, the war in Yugoslavia, and things like that. But essentially, I think from a geopolitical standpoint, the period between, say, the aftermath of the US invasion of Iraq in 2003 and the start of a major escalation between the US and China in 2018. So that's a neat 15 years. That was a period of great geopolitical moderation, if you want to put it that way. And then you start to think about, which one is the normal, which one is the abnormal, and actually the abnormal was the previous 15 years. That was a usually calm era. I'm not really entering the debate on whether we're entering a new Cold War or not a new Cold War. I think that's simplistic anyway. But the point is that the post-Cold War era was a period of exceptional geopolitical calm. And in a way, we have to reinvent, refine ways of thinking that were prevalent in earlier eras, both during the Cold War and actually before the Cold War. Where conflict was considered part of life in a way that it hasn't been in more recent times. So essentially, it's a bit of a bleak point I'm making here, but the broader point is that maybe the new normal is now. Maybe we shouldn't see this less favorable environment as a point of crisis, but rather as a point of normality. I know I'm having a side look at your screen, Valtrode. I know that people are building all kinds of indices. I think a lot of these are kind of, self-justificating. So I take relatively little input from there. I'm thinking more in broad, holistic historical terms, and of course from an EU-centric perspective. Because if you're in, say, Southeast Asia, to take just one example, you have a different perception of when is good times and when is bad times. Okay, so the other point that often gets ignored or downplayed is we have so much more internal strength in the EU compared with 10 years ago. So essentially, the point I'm making here is that 10 years ago, 15 years ago, the EU was exporting instability and importing stability, and now it's opposite. And we went through a series of really life-threatening, existential challenges in the EU to an extent that I think the current challenges, which are very serious, are not. And here, of course, I think of the Eurozone crisis. I also think of Brexit. And I remember the sense of despondency and urgency in Brussels circles at the time and in national capitals. And I think it was much more acute than it is now for good reason. So we've been through a lot, and here I mean both at the political level and of course also in terms of financial safety and soundness. If you look at bank balance sheets, if you look at sovereign spreads, if you look at volatility, and I think this should be part of the scene setting. The third point I would put in on scene setting is that in general, because I will speak about finance, cross-border finance is less affected than cross-border trade by geopolitical tension. And the reason for that is just because there is less financial integration between current or potential adversaries typically than there is trade integration. And the reason for that, to make a long story short, is that financial integration requires more trust than cross-border trade. So you can trade with the enemy or with somebody you don't trust quite easily. You don't financially integrate with somebody you don't trust. And that's mirrored by the contrasts that are experienced by the relevant international institutions. The WTO is in existential crisis. The IMF is facing major challenges because of the structure of China lending to countries and not being in the Paris Club and so on. By contrast, you go into Basel, you're at the BIS, it's business as usual, including with the Chinese. So that contrast strikes me, and I think it's worth reflecting upon. Of course, the global institutions are just, a superstructure and just a manifestation of something deeper. But I think the something deeper is that the level of cross-border integration is actually very differently distributed in finance from what it is in trade. Even so, in principle, financial integration follows trade integration, but it actually doesn't work that way because, in a way, the financial world is much more hierarchical, for lack of a better word, than the trade world. And so there is this kind of system of the US at the center, a bunch of jurisdictions around the US, including, say, Canada, Australia, the UK, and indeed the Eurozone, Switzerland, and maybe a few more. And I'm getting a bit more in Japan. And then you get one step more remote. You have maybe a few more jurisdictions, but China and Russia and other geopolitical hotspots are peripheral to the global financial system in a way that they are not, or at least China is not, but I would argue also Russia is not, in terms of the global trading system. And I think that makes a major difference. Maybe we will elaborate on this. I think it's a very important point I'm trying to make. I haven't thought it through, even so I think it's important and it's real. So I would welcome, pushback, challenge, and discussion on this. Okay. What's happening with Ukraine? I can be pretty quick on this. Of course, there were and there are direct and indirect financial exposures. So I think in the immediate aftermath in 22 of the full-scale invasion, a lot of things happened. They were generally orderly. We can discuss them. Some of them were Western and in particular European market participants reducing their exposure to Russia to a limited extent. But, a good example, of course, is Société Générale selling Rosbank. Conversely, and in a way more interestingly, we cut the Russian presence in the Eurozone and European financial system. So the two main cases here were VTB and Sberbank. The Sberbank case was a bit trickier and I think very interesting. So we can come back to it in the Q&A. Obviously, there are still major European banks with operations in Russia. Raiffeisen is the biggest, UniCredit comes number 2. The other ones don't really have a retail presence, so they're kind of a different nature. They're mostly involved, apparently, with Western companies in Russia, those which have kept a presence. But I think Raiffeisen and UniCredit are salient. And of course, you have financial assets held on both sides without necessarily operational presence of institutions. So there are Western and European financial assets held in Russia. It's difficult to have a full mapping on it, but we know that around 30-40 billion of euros are held at the Russian securities depository, some of which through Euroclear. conversely, of course, there's a major issue of the Russian reserves, which were held at Euroclear and trapped there with the sanctions on February 26, 2022, which is a hugely interesting. So as you know, there's about 270 billion euro of immobilized reserves in the G7 and Australia and Switzerland and the EU as a whole. Of this, about 2/3 are at Euroclear. So the remaining, so 180 are at Euroclear, about 90 are elsewhere, which includes essentially elsewhere in the EU and Japan, because the other jurisdictions, US, UK, Canada, Australia, and Switzerland, all have relatively little from what we can gather from different bits and pieces of information. It's not a very transparent world, of course, but at this point, there's no reliable indication of how much in Japan and how much in the EU, but basically you can think in very stylized terms, and I think this is probably not correct, but not very far from correct, that of those 90 billion, you have 3/3, one-third in the EU, 1/3 in Japan, and 1/3 in all the other jurisdictions that I mentioned. It's probably not exactly that, but not super far. But Euroclear is a big piece. And Euroclear is also very special because it has these particular terms and conditions, which means that, the Russian central bank is a risk-averse investor. It seems that almost all of this money stash of 180 billion was in short-term fixed income assets. So basically, almost all of it has come to maturity. So now it's in cash at Euroclear, and Euroclear can invest and make interest income on that cash without the interest income in any way belonging to Russia. So the income that is made on the Bank of Russia's cash deposit belongs to Euroclear. That's pretty clear. And that's why the EU is now taking that money from Euroclear, which raises all kinds of different questions, but which are intra-EU questions, and questions about the vulnerability of financial infrastructures are not about punishing Russia or sovereign immunity or etc. So as you can see, I'm obsessing about this issue of Euroclear. It's fascinating. Maybe we'll come back to it, maybe not, but it's part of what I'm talking about because there are also risks to, the future viability of Euroclear, the future of financial infrastructure, the future of foreign reserves, trust in the international monetary system, and that's directly triggered by the war in Ukraine. And of course, there are risks of escalation. I don't have to expand. Cyber attacks are a fact of life, but they could be escalated by Russia. And I think more interestingly, without going the full way to nuclear escalation, heaven forbid, but in between, you can think of pretty serious hybrid operations in which Russia would get serious at trying to undermine trust in the European and global financial system. And that's why I believe Claudia Bourg is right to focus on that in a very prudential mindset. So let me not elaborate on that, but again, one issue we may come back to in the Q&A. Okay, so my next and last point is that this is actually agenda shaping for the EU. And that's not entirely new because you can think of past episodes when geopolitics shaped the policy evolution in the EU financial system. I think a very early and interesting example is why did first the creation of the euro. And that's a long time ago, but I think everybody would agree that the Law report was before the end of the Cold War. Conversely, the end of the Cold War and the corresponding geopolitics played a role in the decision-making process that was accomplished at Maastricht. And therefore, that's a way to think about geopolitics shaping the EU financial policy agenda, and perhaps the most important things that the EU ever did in terms of financial policy, which was adopting the euro. But also more recently, the Baltic countries' adoption of the euro was explicitly geopolitical. I mean, this was in the middle of the Eurozone crisis. There was absolutely no reason to join the euro, except if you were obsessed by the risk of Russia planting a wedge between the core of the EU and the Baltic countries. So that was a very neat case, actually, of what I describe as agenda shaping, but also if you think of the response to anti-money laundering issues that essentially surfaced in 2018, and all of them, I think, had the ones that were salient at the time, they all had a Russia component, and that led to the creation of the AML authority, which is kind of, I mean, Torsten, we were celebrating yesterday and today the 10 years of European banking supervision. I think of AMLA as kind of the little sister to the SSM. It's a project of comparable radicality. I wouldn't necessarily say comparable ambition, because in the big scheme of things, AML supervision is probably less important than prudential banking supervision, but it is really of a similar nature. And like the SSM, it was triggered by a comprehensive failure of the previous system of national supervision, leading essentially to a race to the bottom, long story short, that convinced policymakers that unless they reform the architecture of the system, they would not get it fixed. But that was geopolitical in the sense that it was entirely triggered, in my view, by Russia-related cases. And now you see an acceleration of this since February 22. I would argue that if you think of how the TPI went through almost without controversy, I think it has something to do by the fact that this was in the summer of 22. And this is difficult to prove, and I have not worked on it in depth, so I would very much welcome pushback on that notion. But I think if Russia hadn't invaded Ukraine, we would have had more resistance at the political level to TPI. And of course, the ECB is independent, and they didn't do it based on politics, but you know what I'm talking about. Now, of course, I already mentioned the new emphasis of ECB banking supervision on geopolitical risk. That's, as I said, Claudia Buch's signature issue. The digital euro, I think, is also very geopolitical. And one way to understand the digital euro project is to have a backup system if the US cuts away Visa and MasterCard. And I think that's a very plausible way of understanding the digital euro effort from an ECB perspective, is to reduce critical dependence on the systems that, you know, under tail scenarios could be used by the US as geopolitical leverage. Financial sanctions, of course, we see a lot of buildup, which is also capacity buildup. As some of you may have noticed, many of the financial sanctions that were slapped on individuals at the beginning of the full-scale invasion were not legally robust and have been nullified in court, which is very embarrassing for the EU as a sanction-making power. So they need to get their act together, and there is a need for capacity building in that area. Whether it results in the end in a European OFAC remains to be seen, but something along those lines. And I think perhaps most interestingly and most relevant in connection with the conference that Torsten and others organized in the last few days, renewed attention of leaders to the EU financial sector. As you know, the Capital Markets Union was discussed at the level of heads of state and government in the informal European Council last month. I don't remember a European Council that had such an in-depth discussion on nerdy financial sector issues since December 2012. I think this is entirely because of the geopolitics. So basically, there's a realization, which I think is pushed by Scholz and Macron, even so they don't have a joint plan, but they're working on it, I guess. To say we need to do something here, our finance ministers have failed. There is a bit of a coalition issue there, of course, on the German side that doesn't exist in France. But I think both of them are blaming their finance ministers for failure to bring these dossiers forward. And I interpret the famous Macron-Bloomberg interview saying, yeah, no problem if Santander purchases Société Générale, in the same context. It's driven by a renewed salience of those issues, which, by the way, Macron knows well because he was handling them for Hollande in the previous round around 2012. In terms of, you know, how important it is, not just in terms of the plumbing, but in terms of the Chefsache. So I want to leave you with this quote from Joachim Nagel, who is, of course, the president of the Bundesbank. And a couple of weeks ago, he said, I mean, you can read the quote. It's really this notion of a vinculo esterno, right? Of an external constraint on EU policymakers that comes from the geopolitical pressure This is becoming ever more important in a changing world, discord and conflict, blah, 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 where basically this hostile world should force us to get our act together. I think I disagree with him on the specifics of how to do European deposit insurance and what have you, but I think in terms of the big picture, this is exactly the kind of things I was trying to convey in my previous slide. And let me stop there. Thank you very much.
So we're looking at the discussion. I'm looking a bit at Barry, whether he wants to go first and say a few things. Please feel also free to ask some subjects, raise your hand or put it in the queue. Easier would be for me to see the hands. Do you all hear me?
I don't think so.
No, I need to switch off mine. Sorry.
So let me start again. We thank Nicolas for his wonderful tour d'horizon. Do not feel shy to ask any questions for understanding. There were a lot of, transmission protection instrument. What exactly is this? Because it's actually also a bit of a euphemism or whatever, and so on. So do not feel you cannot ask these questions. We're in an interdisciplinary context, and not everybody knows these technical terms. But otherwise, I would also like to just invite questions from the audience and from from online. Let me perhaps start with a few remarks first, things that I think we need to discuss. I'm not at all, I've never worked on this before and also don't intend to. There's too many competent IR people there, yes. I mean, I first found interested that trade is more affected, even though it, as you rightly said, it is least sensitive to trust. We should discuss a little bit, why is this? Is it market concentration in financial markets? So if a few big players of banks kind of hold together and the BIS orchestrates it all, then fine. Is it the US dominance in this field still? Finance, transnational finance, while in trade it may not be the same because you have Russia and especially China in it. A similar point was I had, and that was the graph that Nicolas saw. I had just briefly read a report that, or actually a section in the Financial Stability Report that the ECB recently did, actually this month, just out, in which they talk exactly about geopolitical risks. And they discuss very much, is it corporations that are first hit by such a, realization of a geopolitical shock, or is it banks? How is the transmission of such a shock, and who will suffer longer from it? And also come down on that it's the non-financial corporations that are harder hit at the beginning. And then as that worsens the portfolio of banks, it will also hit the banks. It's not how I would have thought before, that this is the way how it goes. There is a distinction between geopolitical risks, so really a kind of a political event, war, all these things, that then hit the economy at large. There can also be geopolitical fragmentation, and that markets suddenly become segmented, and the usual thing is bond spreads or something, that the same risk classes have not the same price anymore. And they test it also for intra-euro area and find that actually when you have such a shock for an index that has been published in American Economic Review, using just newspaper reporting about geopolitical shocks. So something that political scientists used to do can now get you into the American Economic Review. They say to such a shock, geopolitical fragmentation between Italy and German bond markets is actually not significant. There is not a big change in the spreads, while there is it is out of corporate bonds into government bonds. Again, something a bit surprising to me. Now, all this is measured with a vector autoregression model where you try to kind of test a sequence of events. I would be very interested that we take up this whole question of economic warfare, whether seizing assets from Russia is, so to speak, a one-off. It will spur, efforts of especially emerging markets, i.e. Russia and China now, to get out of this dominance of the West, that they can impose sanctions on you. And then, of course, these geopolitical risks I don't think we had ever before, that we need to protect against the United States. I mean, you had mentioned the digital euro as a kind of Trump protection instrument, right? That is a new thing, TPI2.
Yes.
That is something that I find also we should really discuss here. And with that, I would stop and hear what people have to. Whether Nicola wants to immediately comment on something. Any takers in online or?
I mean, I love to talk, so if you want me to talk, I can talk.
You have to talk.
That's not the point.
We have. Introduce yourself.
Zeitlin, visiting fellow here at the Schumann Center. Nicola, I'm really sorry I got confused at the time and missed most of your presentation, but I wanted to react a little bit to the last things you said while I was here, and also we were both present in different ways at the seminar on Capital Markets Union. And I have to say, I mean, while I can completely understand concerns about the payment system, the impact of geopolitical risks on companies and on banks and so on, I find the argument, the geopolitical argument in favor of Capital Markets Union to be kind of not so convincing. And it makes me wonder, to what extent, I mean, there are several ways to see it. You could see it as it's a new argument for people who always wanted to do this anyway. That was definitely the impression that you got hearing, people from the EU financial policy world on Tuesday. Or you have the feeling we must do something, and so here's something we could in theory do. But if we really want to find financing for EU common defense and defense industrial strategy, there would be a lot easier and faster ways to do it. So if the EU has to wait until Capital Markets Union advances in order to be able to deal with some of those, how do we finance the defense industrial base, then that actually is worrying rather than encouraging. So I'm wondering what you would say.
Yeah, that's a good question. So why don't I take it right away? I don't think the argument is we need Capital Markets Union to finance Ukraine's defense in the current war, or even our defense capacity buildup in the next few years. And that would be a bit of a silly argument to make, A, because the current system is able to cover those costs, but B, perhaps more to the point, because any action, even very ambitious action on Capital Markets Union, is bound to be very structural and take a long time to yield real economic effects in terms of financial capability and efficiency. So I think if you have a financial emergency, this is not what you want to consider. I think, however, that there is a very plausible analysis that the US financial sector participates in US geopolitical heft, and that if the EU is able to build up its financial sector in terms of scale and efficiency, it will participate in EU ability to act as a geopolitical player. Now, this is generally viewed, sorry, this will horrible from me to say that. Americans are often insensitive to that way of reasoning, and in a way that's understandable. But I think that the way it is felt in many quarters across the EU, and far from only in France.
Thanks, Thorsten Beck. This was fascinating. So the first thing, actually, a similar question as Waltraud. I didn't quite get the argument. So trade is more sensitive than finance to geopolitical risk. I would have thought the opposite, and I would have thought the fact that maybe there is that there's more retrenchment in trade than in finance is because finance hasn't gone. Cross-border finance has gone more than trade, right? Because I would have thought maybe finance doesn't go down as much because it hasn't gone up as much as trade, but that's really not the case. So I'm a bit confused about that because I would have thought finance is extremely sensitive to the lack of trust and lack of contract enforcement. Then wait, yeah. So the other thing, and that gets back now to the I think you also mentioned as well, so with taking Russian assets basically for expropriation, it is to pay for Ukraine. It sets a precedent, and of course the whole geopolitical conflict might lead to kind of indirectly undermining or directly undermining, one should say, the role of the US dollar as world currency, reserve currency. Of course, there's another point, and again, this brings me back to work by Barry Eichengreen, that an America first or America only policy might actually further undermine that, right? Because there is this, again, in the paper by Barry Eichengreen, they show basically that there is a correlation between political linkages, alliances between countries and the other country holding the second country's currency as reserve currency. So if Saudi Arabia is more likely to hold US dollars than Russia, even before the currency. And of course, the opposite, you could also argue about the euro. Maybe there was always this talk about making the euro a competitor to the US dollar. Well, as long as Europe is not a geopolitical power, according to this argument, that's never going to happen. So by turning Europe at a minimum into a geopolitical player, maybe you also strengthen the euro indirectly. The final question I had, I'm not sure, you didn't mention this in your presentation, maybe you haven't thought about it yet, but on the cross-border banking, I mean, you mentioned, of course, UniCredit and Raiffeisen, but is there also, as the world kind of splits up in 2-3 blocks again, as we've had it before, is there also kind of a reshuffling, let's say, of banking networks so that some, let's say, large European or American players will withdraw from certain markets, enter others, and the same maybe also for Chinese players? Thanks.
There's lots of stuff here, and I'm not sure I will do justice to all of it. And I'll do it in reverse order. My view of the geopolitical friction is that but again, I'm not a geopolitical analyst, so I'm kind of, talking about what I don't know here. But I don't view it as the world fragmenting in blocks. I know that's a very mainstream way of describing it. It's not what I observe. I think it may be that we get there, but I don't think that's what's happening now. I think what has happened is that Russia has withdrawn from the global framework by attacking Ukraine. But China has not. And even so many people in the US paint it that way, I think it's misleading. And actually, that's a US view that is not shared in Europe that much, except in, extremely US-centric parts of the European debate. And again, push back at me because I'm here to learn, but that's that would be my answer to your third point. And take it from there, maybe as a follow-up.
Just very quickly,
oh yeah, sorry.
This might be a dynamic process, right? I mean, maybe we're just seeing the beginning of this decoupling. I don't know.
Yeah, but in that case, when did it start, right? I mean, I think if what we're seeing is a fragmentation of the world in antagonistic blocks, including one led by the US and one led by China, and there's a lot of chicken and egg here, but I think the starting point of that was the Trump trade war with China in 2018 specifically. I don't think that's how the Chinese frame it. Now they have their own motives, of course. Again, we might end up there. We're not yet there. And the question then becomes what would make us end up there. I don't think the current Chinese stance, again, I'm venturing out of my comfort zone here, but as a kind of holistic risk analyst, I don't think the Chinese stance in the Ukraine war, annoying as it is that. And we can discuss that further if of interest. I think a Chinese invasion of Taiwan would probably get us there, but they're not doing that at this point, or at least I haven't seen that. So, these are difficult issues, but I basically view, China likes to describe itself as a status quo power, and I think there's a lot of support for that view. So that goes against the narrative of, and to state the obvious, China has benefited hugely from, the global rules-based order, if you want to call it that way, and they're not obviously irrational in their foreign policy thinking. Even so, I think in domestic policy you can see elements of irrationality, but you don't see that obviously in foreign policy. Okay, so maybe we'll come back to some of those issues. Of course, they frame the whole discussion, and therefore, even so, none of us are, chartered geopolitical analysts. I think we cannot escape those discussions. Your second point was about the Russian reserves debate and the link with dollar dominance and the global monetary system. I'm not sure what the question was here.
Oh, I'm not sure either.
Okay.
Do you see this? Would you actually? Maybe the question was that would you see actually the EU becoming a geopolitical player also see a result in a strengthening of the euro as a reserve currency?
So that's a really interesting question, and I hadn't thought it that way. But in a way, you could paint a story that the apparent greater EU reluctance to confiscate reserves compared with the US enthusiasm for confiscation now materialized in the Repo Act, which was part of the Ukraine assistance package, makes the euro more attractive as a reserve currency compared with the dollar. And actually, I have never thought of it. But now that it comes in our conversation, it's a very interesting point. Now, of course, all this is blurred by a lot of confusion in the public debate about Russian reserves. And part of what I'm trying to do is, cut through the noise, but it's difficult. Not least because of the enormous voice that US authorities have in that debate, which frankly overwhelms any alternative message. And I don't want to sound, too goalist here. I'm not a goalist. Let me make it clear. My French hero of the 20th century is Jean Monnet, who was a famous Atlanticist, not de Gaulle. So anyway, essentially, what I'm saying here probably is that this story of Russian reserves is not over, and depending on how it unfolds and what the end game is, if that ever comes, it will have different consequences. That would be a kind of cautious way of answering your question. But we can come back to it because, again, it's so interesting, and I've been obsessing about it a lot in the last 6-9 months. Your first question was following up on Valtraud's question about, trade and finance. And of course, I was too simplistic in the way I put it. But I think the fact that both of you, I think, made reference to trust is kind of the answer, right? You can trade without trust, and people do that all the time. You cannot do finance without trust because finance and trust are, as everybody knows, synonymous. So that's kind of what I was getting at. Now, of course, depending how you measure cross-border financial integration, it looks differently from trade integration in different ways. but I think it's a fact that financial integration between, say, generally speaking, the G7 and China, let alone the G7 and Russia, is lower than their respective levels of trade integration. So that's what I was trying to say.
I have Odysseus and then Martin.
Thank you very much. And thank you, Nicolas. Very nice to see you again. Very interesting and thought-provoking presentation. My question is very simple because I'm very ignorant in these topics, but let me start with a premise here. And the premise is that, in my eyes, geopolitics is done by governments, by sovereigns, right? Who plays geopolitics? It's governments when they decide to invade a country, to impose sanctions, etc. So the financial world, to an extent, reacts and interprets geopolitics. So the question, if this premise is right, the question is, to what extent the financial world, so the big financial corporations, they can resist geopolitics from governments, they can resist this geopolitical competition and carry on their business. Do you think they have this kind of power to ignore this warmongering narratives? This is my question. Thank you.
Perhaps we take a second one.
Actually,
Would you prefer?
yeah,
Okay.
yeah, because that's such a good question. So, I try to look at this very holistically and with an eye that is rooted in history, because I tend to think we need to, not look at it certainly on the basis of the experience of recent years. So because we're in, as Xi Jinping correctly says, we're in a new era. I'm not sure he's right that we're in the biggest geopolitical transformation for a century, but Xi Jinping. But we're probably in a new era, and we're not sure how it looks like ultimately. So in the early 19th century, if I'm not mistaken, not to mention even earlier periods, there were financiers who were financing both sides of, armed conflicts. So in a way, finance is not trapped by geopolitical conflict necessarily. Now, of course, the more the financial sector is nationalized and repressed, in the sense of financial repression, the more identity you have between geopolitical actors and financial systems. But that's not an intrinsic feature of the financial world. And indeed, if you look at, so a good example of that is actually the BIS, right? So the BIS was established in 1930, the Bank for International Settlements, in Basel. It was established in 1930 to solve an immediate problem, which, by the way, went away very quickly afterwards. Having a trusted central party for the settlement of German reparations. But it also was the culmination of a long process of maturation of this idea that central banking is a thing and global central bankers need a place where they can discuss in trust, by the way. So that was Montagu Norman's vision for the BIS, a club of central bankers, as you remember, the governor of the Bank of England, at the time, very powerful figure. Then you had an alternative view, which was Hjalmar Schacht, who wanted it to be a development bank, basically the World Bank before the World Bank. And then you had the French and Americans who wanted it to be the settlement agent for reparations, which kind of won the decision on the face of it, but there was always this kind of, multiplicity of purposes. By the way, if you're interested in that story, the book by the late Gianni Toniolo, The Official History of the BIS, is a superb financial history book, one of the best I ever read. So I read it last year. I'm very inspired by it. The fun fact about the BIS is that the BIS during World War II was, if my memory is correct, 57% owned by Axis powers. And its president and chairman was an American, and it was in neutral Switzerland. So its business model as a bank, which was never very clear anyway, was destroyed by the war, but they kind of managed to convince member central banks to still give it enough business to survive on a kind of low-key basis. And what they protected was what was revealed as their core function, which was research and analysis, which they kept doing throughout the war. But the more amazing thing is, they had to enter some very questionable dealings with Axis powers, and especially Germany, in terms of recycling gold and stuff. Some of the story is horrible. And for that reason, they were rightly lambasted in the post-war era. And actually, the Bretton Woods conference, even before the war was over, decided to terminate and liquidate the BIS. It's a formal decision of the Bretton Woods conference, which is very understandable in the context. Now, the BIS is still there. So by this anecdote, I want to illustrate the extraordinary resilience of cross-border financial institutions, or at least some of them. And let me stop here because I want more questions, but that's a partial answer to Odyssea's question, provocation.
We have Martin, and then Pierre, and then Maria.
Yes, many thanks for the presentation, and sorry that I was late. I think it's on. This light is shining. Yeah. My question concerns the European banking system and the regulation and supervision of it. And you mentioned Claudia Buch, the new chair of the SSM, and her focus on geopolitical risk and her geopolitical focus, or let's say, vision. And I'm wondering if there's also a tendency now within the EU, either from the ECB as a supervisor or from the Commission as a regulator or enforcer of state aid and merger controls, if there's any tendency of forbearance, like regulatory forbearance, in the context of this new geopolitical conflict. Or even more than that, if there's even political interference from member state or member state governments in creating European champions, in creating a banking sector that is able to compete with the American banks or with China, and if that goes at the expense maybe of systemic risk and instability.
Just to follow up there, so if Jonathan's point before was on capital markets union, and absent capital markets union, and then Martin's point just now is on national champions and absent cross-border, an effective cross-border kind of market where you have sort of a national kind of banking sector, so absent a truly kind of cross-border European banking market, and then absent a reserve currency, absent these three things, can the EU be a kind of a geopolitical actor in the global kind of sense of that word?
Well, to Harry's question, I would say no, but I think even with these three things, it's not clear the EU can be a geopolitical actor. So no, I mean, it's not that mechanistic, of course. And you can imagine, Russia is a geopolitical actor with a pretty screwy economic basis. So, there are many ways of being a geopolitical actor. So I don't think there are, a list of attributes, and if you tick all the boxes, flash, you become a geopolitical actor. That's not the way it works. But I certainly do believe that at the end of the day, a capacity to mobilize domestic wealth for national purposes is an enabling factor for long-term geopolitical success. And you see that with the Netherlands in the 17th century, with Britain in the 18th century and 19th century, with France and Germany in the later 19th century. So Napoleon is a bit different because much of the business model was based on plunder, but we can discuss. And certainly the US in the 20th century. So each of these stories is different, and I wouldn't say each one of them had a capital markets union or banking union, because I think, you know, that would be a bit too much presentist, as historians say. But I think there is something there, and I mean, then you have this argument, you know, states make war, war makes states, you know. We can go into that argument, actually. It's relevant to our discussion here. But you know the argument, right? That there's a Tilly argument that the financial mobilization requirements from wars creates a modern nation state, financial and other. But I think I'm not too much distorting the argument, but the historians here will correct me. So back to Martin. And it's interesting. You're basically drawing a parallel between what Claudio Borg is doing now and what basically the way Breton won the war against Vestager in the last 5 years, right? And in simplistic terms. So forbearance on competition policy rules, emphasis on national champions, under cover of geopolitical discourse. And you're saying maybe that's what Borg is starting. I don't think that's the case, because it doesn't work the same way. And specifically the emphasis on cross-border combinations is something the ECB has been doing in the previous era. And I see no indication at this point, but you know, it may change in the future, that this concentration on geopolitical risk might be associated with any relaxation of prudential requirements. Actually, I think the banks are suspecting the opposite, that they would be asked to have even more capital because they have to provide for even more risk, and they don't like that. So that's how the Borg stance has been received in banking circles. So I have to think more about your idea. I think it's very thought-provoking idea, but I also believe you could make a very anti-Breton argument, which I would make, which is that authoritative and strong competition policy enforcement makes the EU stronger, not weaker. And you have this kind of confused debate in the discussion about strategic autonomy, because you have those who say we need capacity, say in defense, so we need to forget about competition rules and you know, have massive state subsidies at the national level. And then you have other people like my co-authors and colleagues at Bruegel who say, no, we actually need competition rules more than ever, because otherwise Europe is torn apart. But that's also why we need common financial capacity at the EU level to give the subsidies that the defense industry needs. And that's the only good way to do this. So that becomes an argument for fiscal union, but not for competition policy relaxation. And I think this debate is going on. It's in play right now. It's very amorphous in many ways, but I wouldn't say that there is an identity between the aspiration to European strategic autonomy, if you want to call it that way, and the idea that there should be forbearance in things like competition policy or prudential policy. I think it's more multidimensional than that, but very, very, very stimulating idea. You should write a paper on that. Okay. Listen to her, not to me.
Thank you. Thank you. Pierre Schlosser from the EUI. It's a pleasure, Nicolas, for I mean, thanks for getting us started on this really important discussion. So I wanted to reflect with you on the concept of geopolitical risk. Starting with the usefulness, and I think the usefulness, if we all travel back to the days, I mean, the months before actually the invasion of Ukraine by Russia, I think that having something structured, a risk category on geopolitical would have been helpful. Because when I think back, I'm still amazed by how unprepared, I mean, a lot of actors were as to the possible consequences and material consequences, not to mention, I mean, of course, the energy rising costs and the fact that a large part of our industry are still reliant on cheap energy, but the same for the food aspects and the rest of it. So I think that there was and there is an element of, there is a driver for really making sure that we collectively understand this risk better and can also be in a position to discuss it in the best informed way. So that leads to a bit the definitional aspect. So what is it? What are the components? And I think that more than the components, it's probably also what are the boundaries. So what is a geopolitical risk and what is it not? Because there is a risk that you end up really going into a lot of different things, such as also defense spending or lack of defense. I mean, you mentioned AML. I think it's really difficult to end up on our feet and try and map a very safe, let's say, boundary as to what is geopolitical risk and what is it not. Then the question is, to what extent and how far would you like to push the, let's say, the analytical and, let's say, indicator part of the risk? No, so once you've solved, let's say, the transmission channels and categories that, then how can you analyze the impact and the magnitude in some ways? And there, I think that pushing yourself even further would be to look at, is there such a category of geopolitical related financial risk in the first place? I mean, could we go there in analysis, in comparison, of course, to the climate risk category? And I think the climate risk category at the end of the day is quite, I mean, there've been lots of discussions as to, you know, is it going too far and what's the granularity, what kind of data can you get? But still, I think that where they've been quite smart is to say, well, we have obvious and existing categories of risk in finance. The question is, to what extent are those risks impacted by climate risk? And I think that this might be also, I think, a reflection to have as to how do geopolitical risk impact the standard categories of, I mean, credit market, liquid, everything that we know, so that the people from the field will perhaps look at it also with a less, let's say, with less skepticism. When we talked with central bankers in the past, this was considered to be really an academic idea, also to train people on geopolitical risks. And on that, Thorsten will remember some private discussions we had. I'm happy that we had positive outcomes. But I do feel that this is also part of the game. We are talking to people who have no geopolitical or IR training at all. They're nothing again. That's accountants. They're sometimes accountants. They sometimes have a background in banking. They're mostly credit risk experts for many of them. So you will need to really take them out of their natural habitat or way of thinking to reach some impact at the end of the day. So no question, I'm sorry, but it's to push you back on some of the different aspects.
No, I love that, and indeed, you know, I think you can brag about having been ahead of the curve in that sense, and also thank Mr. Putin, because I think one reason why people were so unprepared before the full-scale invasion is that they had an analytical framework that led them to the very strongly confident conclusions that Putin would not invade. I was part of that mistake. I remember my own views up to literally days before the invasion. So in that sense, I think if you think in terms of risk analysis in a kind of holistic way, there's a before and after February 24, 2022. So I don't remember if you started to push that idea before. But yeah. They had hard information, but But I think for people in the risk analysis category outside of the circle who had that hard information, I think they had essentially, I mean, it would be exaggerated to call it a model, but they had a whole framework of analysis that was destroyed by that event, and that's consequential. And I very much like, and I think you're completely right, the way you compare the journey over the last 10 or maybe more, 15, 20 years on sustainability-related risks with what is starting now on geopolitical risk. And I think that's exactly how Bourg views it. So to the extent that he's probably thinking of using tools and frameworks that they have constructed for the sustainability-related challenges, and then they may or may not work. I don't know if they work for sustainability, but they may or may not work even worse or better for geopolitics. But I think that's kind of the thinking you see at the ECB right now. And I think it's interesting. It kind of makes sense to me. Now, of course, if I enter the prudential jargon, which some of you probably are familiar, but some of you not, this is a Pillar 2 issue, not a Pillar 1 issue. I will translate. This is an issue on which supervisors and more generally authorities have to understand the risk drivers and make a judgment on what that means in terms of the intrinsic riskiness of a particular situation, as opposed to something you can capture with quantitative indicators, which give you a quantitative mechanical result in terms of, say, capital requirements for banks. So I think the ECB is very clear about that. It's clear about it in sustainability-related risk, contrary to what Lorenzo Binismaghi said yesterday. It's not a Pillar 1 measure at this point, and I think the same applies to geopolitical. I mean, if anything, I think it's even harder to think of quantitative indicators you could use for geopolitical risk as opposed to sustainability-related or at least climate-related risk exposure. I mean, I'm not a specialist of this kind of analysis, so basically I don't know what I'm talking about, but I understand that risk specialists distinguish between lumpy categories of risk and less lumpy categories of risk. So geopolitical risk tends to be lumpy. It's either or, Russia invades or it doesn't, which makes it very difficult to model because models work best when these things are graduated and kind of linear. Now there's a lot of advanced mathematical concepts in that kind of literature that, despite my former mathematical training, I'm completely unfamiliar with, and therefore there are other people who are much better qualified than I am to talk about that piece of the jigsaw.
Yeah, well, sorry.
I'm just talking because I don't see anybody in the. Maria had to leave. We lost her, unfortunately. Elena.
Thank you. First of all, many thanks for being here for your presentation. I'm not an expert at all about these topics, but I work on sustainable corporate governance. And so I also connected a little bit with the question of Odysseus. I was wondering, what's your view about the fact that I see that there is a lot of effort in the European Union to foster regulation for sustainability and sustainable financing. But I also know that there are states like the United States that are kind of pulling back on these issues. And so while at the same time, other countries, like, for example, Australia, that are many times out of the geopolitical scope of our foreign relations, international relations. So how do you think that, if you think that the European Union has a real chance to lead the transition while there is such a big actor like the United States that is throwing back, and if you think that supervisory authorities that are kind of being delegated a lot by the European Commission in terms of power to control sustainability transitions will have a role to play in these dynamics among states or not? Thanks.
So I haven't done the homework to really answer your question because, you know, the discussion about sustainable finance, I mean, you know much more than I do about it. It's been a bit amorphous. It's been kind of tentative in terms of finding the right policy instruments or even the right policy objectives, I suspect. So we know the transition we want to achieve, which is a green transition, right? We want to achieve a transition to a low carbon, low emission economy. But the role that the financial sector ultimately plays in that, I think, is kind of still being debated, even so a lot of decisions have been made in terms of creating instruments or at least that would be my perspective on this. But that probably means I didn't understand your question very well. So can you rephrase it after the provocation I just made?
I mean, I think you have a point that the role of financial sector is not super clear, but I think that in the European Union, there is a lot of, there is a great attempt to kind of make the financial sector a leader of the green transition, and also shareholders and institutional investors are being delegated a lot of power, and supervisory authorities are also kind of being put in charge of enforcing these new obligations, not to like to avoid providing for more like I don't know, intervention from states in terms of civil liability and stuff. So, but at the same time, I see that there are other actors, like important national actors, like United States, that are doing also like anti-ESG campaigns, anti-sustainability campaigns. So I was wondering if you have a view about the idea that if the European Union is actually capable of driving leading the transition when there is such a strong actor drawing back, and if supervisory authorities and financial institutions in general are the right players to do it.
Can I briefly say something like this? It actually fits quite nicely with what I wanted to say. I earlier had this in this ECB thing. There is an index that is now quite a lot used, and that is really newspapers reporting, Canadian, 3 UK papers, and 6 American papers. And that seems to track risks quite well. It was actually quite volatile during those times that we thought are quiet, while the crude price index of oil was relatively stable between after the second oil price shock until 2002, and then it gets volatile, while this newspaper index on global geopolitical risks gets kind of flat. In other words, it was more oil that was an indicator of geopolitical tensions or shocks or risks than this newspaper reporting, which was probably overlaid also by domestic crisis, right? So not terrorism, war, tensions between states. And in other words, and that is to me a bit one of the possible reasons why we see this, that trade and non-financial corporations may be first hit by such shocks, even though we had thought finance would be more sensitive to it, that this could be one of the transmission mechanisms. And it almost suggests to me that a green transition could actually help even with the stability of economies in the face of such shocks, if you know, oil is a highly volatile thing that can suddenly lead to energy crisis if you're not prepared and can't substitute.
Taking notes because this is really interesting. So basically what you're saying is that the green transition is not only good for the world, but it's good for European security because it protects Europe from the volatility that comes from oil, which it doesn't have.
Priced in dollars.
Which in addition is priced in dollars, as Jonathan Zeitlin just told us. Actually, when you think in those terms, the same reasoning applies to China, and it may not be a coincidence that China is doing the green transition as the EU does, same with Japan, not the US, not Russia, not the Middle East. So there seems to be something here. But in any case, you know, it's not, all I'm saying here is that structurally energy importing places are keener on the green transition, which is almost tautological. But it's interesting the way you relate it to geopolitical vulnerability, I guess. Now to your question, I mean, I think there are several questions within your question, right? Can the EU drive the global green transition? Question number one. Question number two, what is the role of the financial sector in that? I'm very old school. I tend to view question number one as much more fundamental than question number two. And I think as we're seeing, the instruments with which the European Union gets traction are not really the ones related to sustainable finance or sustainable corporate governance for that matter, but they're more like, you know, the emissions trading scheme, the carbon border adjustment mechanism. So it's about good old carbon pricing. So compare with that, sustainable finance is a very oblique, very circuitous way of introducing forms of carbon pricing. That would be my kind of short answer to your more elaborate question. But I may be wrong. I mean, as I said, I've not worked enough on sustainable finance because, you know, I have very little capacity. So maybe, I mean, I reserve the right to change my opinion on this over the next few years. I've changed my opinion on CBDCs. I love your expression. Can I use it and attribute it to you, the digital euro as a Trump protection instrument?
You don't even have to. I give it to you here with.
Well, that's too generous. But I will probably use it with or without attribution, depending on context. I will certainly not say I invented it. You're all witnesses here. I think it's a great one. And frankly, in years of debate about the digital euro, I had failed to understand it until a central banker put it in those terms to me in a private conversation. So I now take the digital euro project actually much more seriously than I did until last week.
And can we close on the digital euro? Just I know very little about it, so we haven't really talked about it for the last hour and a half. We can just like look forward to that as a kind of, you know, what is the geopolitical story there as you see it?
I think it's just this idea that you have a backup infrastructure in case Visa and MasterCard are no longer providing service. Mm-hmm. It's as simple as that, the way it was described to me. So basically, it's not meant to have a big impact in a baseline scenario, but it's something that could be very useful. So the background of that is that, you know, the ECB has been nudging European banks for decades to create a payment card infrastructure that would be European, would be under the control of the European authorities, and would not be, could work in interaction with Visa and MasterCard, but keeps working if Visa and MasterCard are no longer there. And that's exactly what Russia did, and they're very happy they did that because that allowed them to keep the domestic payment infrastructure running completely seamlessly when Visa and MasterCard left in 2022. But in Europe, we don't have that. So given the serial inability of the European bankers to make it happen, the ECB is taking it into its own hands, and that's what the digital euro is. I mean, long story short. I don't know if you agree or disagree with that, but I find it a very plausible story.
I had actually a more story of that they want to make themselves independent of the breakdown of the payment system when next time a systemic financial crisis happens. At least that is not a concern why they have to always take out all stoppers. But you may be of the school that says you have to take out all stoppers in such a situation, whether you can replace the payment system or not.
Absolutely.
So, I mean, you said, or somebody said at one stage that measures to make the European financial system independent of the US would be a new thing. Now, I mean, if we look at it in a longer term historical perspective, I mean, isn't one of the motives for the euro exactly that in the following sense? I mean, first of all, as an indirect longer term response to the United States unilaterally going off the gold standard in 1971 and all the instability that that created. Secondly, obviously, the concern about the exorbitant privilege of the dollar and the benefits for European economies of trading in their own currency and not being reliant on dollars. But against that, and connecting to the last round of discussions, I mean, one might say, this is something that Adam Tooze has emphasized quite a lot, that the most critical dependence of the EU financially, but not just the EU, or a whole series of countries, including Japan, for example, is the swap relationship with the Fed. So the Fed as the supplier of last resort of liquidity in a crisis. And it's hard to imagine that any of the measures that we've been talking about, including a digital euro, would avoid the need that kind of dependence on the Fed, and the Fed backed up ultimately by the U.S. Treasury. And so, the question is, how should we think about that? Is that really indeed the most crucial node in the nexus of, let's say, unequal interdependence? And what would we expect to happen to that if there were another Trump presidency? That's a kind of horrific spectacle.
Absolutely horrific. It's intriguing. I don't know the literature about that. I'm viewing the euro as the euro was obviously a way to isolate intra-European trade and economic activity from currency instability. But you kind of framed it in more geopolitical terms, saying we should be less, the dollar is the anchor of the currency system, and we should protect ourselves from the unpredictability of the US on the basis of the collapse of the Bretton Woods system. I tend to view that as a little bit of a stretch, because I think if you look at currency market instability in the 70s and 80s, not all of it was provoked by US actions. And a lot of it was, intra-European stuff. Still, it may be a stretch, but it's thought-provoking. So that's interesting. If you haven't written it, I also encourage you to write that. But maybe you have written. So I look forward to reading it. I love that. if you think of, so in a way, there is an even grander question underlying your question and our discussion, which is a global rules-based order, right? And the order as we know it was created by the US post-World War II, pretty unilaterally, I mean, more or less. And then the cosmic question becomes, is the US really going to break it? And that question came with the end of Bretton Woods. It came with the invasion of Iraq in a non-economic space in 2003. And it comes now with the US sabotaging of the WTO, which we learned is not just a Trump issue because the Biden administration is continuing it. Well, to a limited extent, but it's still associated with the Trump administration because Obama didn't push it as far. But you're right. I mean, now I think it's beyond dispute that this is not just Trump. There is something deeper at play and less partisan. So, and then the cosmic question becomes, okay, is the US really going to destroy the order, or can we consider that it just, glitches in the order, but the order will remain as far as the US is concerned? That's a big question. And the secondary associated question is, if the US actively undermines the order, can the EU maintain it, maybe with the help of a few others? And I think these questions, frankly, are very prominent in European leaders' minds these days. I mean, ever since Merkel came from this conversation with Trump saying, now we have to defend ourselves because the EU is no longer going to do it. I don't remember, when was that, 2017, 18, 19?
I would have said 17. But...
Yeah. I mean, this is a specifically documented event, which I think has a historical significance. And I think ever since then, for the French, it's kind of, running story and has always been there, even when it didn't have to be there. But that's why I think Merkel saying that is much more significant. And I think it was a turning point in the way these things are discussed among European leaders and thought through by European leaders individually. And I think they've been struggling with that question ever since, and they still are. And, if Trump wins, it will become front and center. If Biden wins, less so, but yeah. I mean, I'm not sure it answers your question.
Not completely, because I mean, it's striking that we, since 1971 or a little bit later, we haven't had a rules-based order for money and foreign exchange. So in that sense, it's a different issue.
We haven't, and we have. So I think of this Russian reserve story, right? I mean, first, as we all know, Bretton Woods was only up and running from 58, so it really didn't last very long. But second, more to the point, I think this system of cross-border reserves and swap lines is a form of order. And if you read what, who is it among the Trumpy, Lighthizer or one of the others who have been saying, we should have capital controls in the US and tax on capital movement. Yeah. And this goes one step further, right? In terms of saying, okay, if that's our order, then Trump might undermine it. Goodness forbid. So, I mean, it's certainly not the first time they're having concerns about that. And I think in a way, the most relevant parallel is indeed the Nixon administration in the early 70s. The dollar is our currency, but it's your problem. And I'm not saying this is the end of the order. I think that's a question. It's an open question at this point.
Okay, before it gets ever more dismal,
Yeah.
talking about Trump and even naming him. Let's call it a day. You had a long day already. It's Friday afternoon. The weather is nice outside, at least here. And I thank you very much indeed, Nicolas, that you were ready to do this on top of some other conference that lasted quite long and was intense. And you all for joining us in this discussion that will be with us for a while. Thank you very much.
I want to thank you because you suggested the topic, and it's incredibly relevant now, and it's very helpful to me. So thank you.